There's a type of financial anxiety that almost no one talks about. It's not the anxiety of someone who doesn't earn money. It's not the anxiety of someone who never tried to learn. It's not the anxiety of someone who ignores the future. It's the anxiety of someone who does everything right. You work, you save, you read, you invest, you stay informed. And yet, there's a constant fear that something is slipping away. That, despite all the effort, the future still seems unstable. This feeling has become increasingly common, and not by chance. We are living through a strange moment in the economy. Inflation hasn't completely disappeared. Prices haven't returned to what they were. The news never stops. The forecasts contradict each other, and every week a new narrative emerges saying that now it's different. The problem isn't just economic uncertainty. The problem is mental uncertainty. We've never had so much financial information available. It has never been easier to learn about investing, and paradoxically, it has never been harder to feel secure. The more financial content people consume, the more anxious they become. This seems contradictory, but it makes perfect sense. Because most financial content today wasn't created to bring clarity. It was created to capture attention. And attention is captured through fear, urgency, and comparison. You're falling behind. This is the decisive moment. Those who don't act now will regret it. This is the investment of the future. Everyone is doing it. The implicit message is always the same. You're not doing enough. And when someone is already anxious, this message doesn't motivate. It paralyzes or pushes them towards bad decisions. This is where one of the most dangerous beliefs of the current moment is born. The idea that the solution to financial insecurity is to invest more aggressively. More risk, more exposure, more bets, more moves. This sounds logical in an inflationary environment. It seems intelligent. It seems necessary. But this logic ignores the most important factor of all, human behavior under pressure. Most people don't lose money because they chose overly conservative investments. They lose money because they can't sustain aggressive strategies when reality hits hard. Aggressive strategies work very well on charts. They work very well in retrospect. They work very well in short videos. But they fail where it really matters, in the real emotional experience of the person living through it. When the market falls, when the news worsens, when the portfolio fluctuates, when fear appears, in these moments, the question isn't which investment is better. It's who do you become when you're under stress? Because investing isn't just a financial decision. It's a psychological decision. And psychological decisions made under pressure are rarely good. Information overload creates the illusion of control. It makes it seem like if you study a little more, watch another video, listen to another expert, the anxiety will disappear. But the effect is usually the opposite. Each new opinion creates doubt. Each new prediction creates conflict. Each new strategy creates the feeling that you should be doing something different. And little by little, your strategy ceases to be a plan and transforms into a constant reaction. Reaction to the market, reaction to the news, reaction to social media. This mental state is extremely dangerous for investing because markets don't reward reaction. They reward consistency. The real risk of the current moment is not inflation. It's not the interest rate. It's not volatility. It's the invisible psychological pressure that pushes reasonable people to make impatient decisions. The pressure of feeling that you need to do something, even when doing nothing would be better. The uncomfortable truth is that many people don't need more aggression. They need more clarity. Clarity about what really matters. Clarity about what can be ignored. Clarity about how behavior influences results much more than the exact choice of assets. The internet makes it seem like investing is a sequence of smart decisions. But in practice, investing is a sequence of well-executed non-decisions. Don't panic sell. Don't change your strategy every week. Don't react to every headline. Don't compare your path to that of strangers. These non-decisions are incredibly difficult in a noisy environment. Therefore, mental clarity is not a luxury, it's a competitive advantage. Investors who manage to remain calm in confusing times are not smarter. They have simply structured their decisions to protect their own minds. They know they don't need to predict the future. They just need to survive it. They understand that investing isn't about maximizing theoretical returns. It's about minimizing emotional errors. Because an imperfect plan maintained for decades beats a brilliant plan abandoned in months.